Welcome to etvFutures.com. It's Friday, February 29th. I'm Remy Hookie for your Commodities Recap. In energy, NYMEX crude oil futures ended lower on the day after hitting a record high of $103.05 a barrel overnight. Recent record lows for the U.S. dollar against the majors saw increased spec buying and also pushed up crude oil. Adding to earlier gains, there was news that a major export pipeline in Ecuador had halted operations overnight. For the day, April crude fell 75 cents to end at 101.84 a barrel. In other energy futures, March RBOB gasoline added 1.66 cents to close at $2.5123 a gallon. March heating oil fell 0.59 cents to close at $2.8397 a gallon. Meanwhile, April nat gas pulled back by 27.6 cents to end at $8.93 per million BTU. In metals, COMEX gold futures ended the session up after hitting another record high at $978.50 overnight. April gold added $7.50 to close at $975 an ounce. For the week, gold has gained $27.20 an ounce. This afternoon, we're joined by Tom Puckett, commodity broker at KIS Futures. He'll recap this week's action in energy and metals and also give us his outlook ahead of the weekend.
Good afternoon, Remy. The market this week has been still continuing the roller coaster ride that we've been seeing for some time, whether it be in the energy sector, metals, even in the agriculturals and the grains. Interesting this week that we've come up with fuel stock piles, the crude and gasoline and so on, that have continued to grow higher and higher as opposed to being lower and lower, and yet we see prices that have moved to new record highs. One comment was made this week that we have bulging fuel stockpiles, and they're looking at that in the context of lack of use, perhaps because of what's called economy slowing, which really is more specifically what I think is a temporary finance and real estate economy slowing. Everything else seems to be doing well, and yet in spite of the fact that things are supposedly slowing down, we hit record highs this week in the crude oil. We've been $1.03 and over in the futures, and so it doesn't follow the so-called school of traditional thought. Stocks this week rose in crude oil for the 7th week in a row, and gasoline stocks were up for the 16th week in a row, and yet we've got prices climbing. And it's generally thought that most of this is based upon speculative positions, and the specs basically seem to be controlling the market, or to some extent. And certainly there's some investment groups and things like that working in there as well that are just looking for higher prices. If we get to a place where we might see the price begin to stabilize, I don't know that we're going to double the price of crude, don't know that we're going to double the price of gold, at least not right now. We may be reaching at least a hiatus for a while, which may cause long positions to be liquidated to bank the money, basically. It's interesting also that in inflation-adjusted dollars, the price of crude oil, based on 1980 as the marker in inflation adjustment, was about $102.53, so $102.53 a barrel. With OPEC meeting in March and probably not expected to raise their output, probably look to see the prices stay high on the thing. There's some rumors that some of the Hamptons boutiques are starting to bring barrels of crude oil in to sell as furniture. That might be a very interesting thing to see happening. Across the board in the metals, gold and silver have both been climbing based upon both economic information that's been coming across, the price of oil climbing, as well as the fact that the dollar this week hit near record lows against the euro. The euro is over 150 and the dollar down in the 73-cent range. Very interesting trade there. On the one hand, it does seem to make American goods more desirable, but also seems to raise the price of commodities such as gold, crude oil, etc. Silver has been trudging along with the gold, and while gold is expected to be pretty close to, if not over the $1,000 mark pretty quick, very well could happen, silver is looking toward the $20. Industrial use of silver is up, and with the policies and fiscal and monetary projections of things in government, we do expect the prices to hold probably for a while. It's interesting to know that this last week or so that platinum fell over 2% in one day's trade. So copper has come off a 21-month high, so the fact of the climbing markets may become, a place where we see a little bit of a sell-off, if not just a reversal of market. I don't think that's going to happen right away, but definitely we can see some profit taking. In the grains, interesting enough, the wheat has been kind of the lead dog, especially Minneapolis, Kansas City, as well as Chicago, trading into the $11, $12, $13 range. Yet for the last couple of days, we've had good sell-offs, strong sell-offs in all the markets. Some think the high is in for the grains, especially the wheat. Others think this may again be profit-taking. There may be another surge to the high. It's going to be a weather-dominated market probably in the spring, as it often is. Ethanol and demand and the various export-import balances will be on the board and will be considered, but weather seems to be the number one thing, at least this time of year, in the grains as we go into spring. So kind of a guesstimate would simply be look for the grains to possibly hold and start to go back up to test the highs, could go to newer highs. Don't see that we're going to just race ahead and do the same thing again, but at the same time I do think we will see a test of the high prices we've seen. So as we finish the week this week, just flipping the coin for next week, I think we'll see more of the same. So Remy, thanks very much.
That was Tom Puckett from KIS Futures with his commodities commentary. I'm Remy Hokie. Join us later 4 p.m. exchange right here on etvFutures.com.